if I can do it. Okay, good evening, everyone. Welcome to another episode on Sequoia training on Wednesday night. If you are new to our platform, Sequoia is actually a platform to service small businesses. On our platform, we not only provide commercial lendings on real estate, we also provide fundings for business that is not related to any real estate, such as account receivable, working capitals, equipment loans, and things like this. And also, we provide other product and services to help our small business owners, such as free benefits for on the wellness program. We provide free benefit for business owners, and we also provide cost segregations, property restorations to help business owners to reduce property tax, so on and so forth. So if you are the first time here, please do check out our website and you can familiarize with the product and services that we can provide. Today we have a very special guest on our platform. I know this gentleman way back in about 2-3 years ago. We met in Vegas in doing one of the convention. Ever since then we keep communicating with each other. He has tremendous of knowledge in what he does, which is account receivable. Now understand, in Sequoia we funded a lot of real estate deals such as warehouses, investment property, apartments, multifamily, so on and so forth. We also do quite a bit of SBA loans. We funded business acquisitions, we funded trucks, heavy equipments, and so on and so forth. However, account receivable has been on our platform for a long time, but this is one of the least known product to many of our agents. So I thought that it might be beneficial for our advisors to come online to share with us exactly what this product is all about. And quite frankly, it opens up the door to a lot of business owners. So without further ado, I would love to introduce a very good friend of mine, and we have been in business for a long time. Caleb, the floor is yours. Please share with us what you can do for us.
Thanks, Alan. I really appreciate that. That's a very nice introduction. I need to take you with me everywhere to introduce me like that. So, thank you, everyone. It's great I see a lot of you on the call here. So, appreciate you having me on here and just talk to you a little bit about what we do at Ledger Business Capital. How it might serve just some of the customers and the businesses that you guys are coming across. So, what I'll just go a quick overview of what account receivable financing is. How it works, some of the benefits of using it, how it works with other types of financing as far as, real estate, equipment, those types, other services we offer, then the benefits and how it can really help a company grow. So feel free to jump in at any time with questions. I love open discussion formats. I certainly would not be offended if anyone asks a question early, and I think it might make the presentation more engaging as well. So, all right. So if you're not familiar, we'll just take you through kind of what accounts receivable financing is, or factoring, as you might have heard it called before, kind of how it works, how it functions, and then, the role that Legend plays in that. So if you have a customer in this situation, maybe a factory or manufacturing company, a traditional billing cycle would look something like the left side of the screen there. So the factory makes a widget. Walmart is going to buy that widget. They're going to sell it. The factory is going to sell it to Walmart, and Walmart will pay once they receive that order. So the problem occurs for the manufacturing company, though, when Walmart's payment terms can be very extended, and Walmart is actually known to really, really extend payment terms. So instead of 30 days, Walmart is actually much closer to paying this company in 120 days. So if this company is cash flow rich, or if they have a really nice line of credit, sometimes they don't need the factoring as a service. But most companies use those lines of credit for other things, and they do need some way to speed up cash flow, because the biggest problem is almost all of their debt is going to be on 30-day terms, or all their vendors are going to be on 30-day terms or less than 30 days. So in order to do business with Walmart, they're going to need to cover essentially 4 months worth of cash flow for the business in order to say yes to what might be a really lucrative opportunity for them. So where Legend comes in, or where account receivable financing comes in, is instead of the manufacturing company waiting 120 days for Walmart to pay them, they would send us the invoice. We would actually literally purchase that outstanding invoice from them. And then we would wait for Walmart to pay us, and that customer would then be able to get paid within 24 hours, and their cash flow would just continue to cycle. So this way helps them out. They can now meet all their payment obligations that are typically on 30-day terms. Some of them might be on weekly terms, and they can say yes to really lucrative opportunities with maybe Walmart or some of the other major players out there. And so oftentimes we run across businesses that have lots of growth opportunities, and this is a fantastic product for businesses that are growing quickly, especially new businesses. We have a customer we're working with right now. They're a construction company, and one day everyone decided to walk off the job essentially, and they were going to just follow this one guy who had been running the company for forever. And one of his biggest customers said, well, if you could start this company, we'd give you all the contracts. And they said, all right, we'll try. So kind of overnight, they had a company that's doing $3-4 million a year in revenue and 50 employees, and it all just took off so fast. So that's a great opportunity for someone to use accounts receivable financing, because they have great customers who have really good credit and strength, but they're just a new company. So sometimes banks or lenders are shy on a company that hasn't been around very long without a proven track record and might not be able to meet all their credit needs. So does anyone have any questions about kind of how it works and just the initial process? Very good. Well, feel free to chime in if you do. So the benefits of accounts receivable financing or factoring. So it is actually not a debt product. So it's not going to skew any debt coverage ratios that a company might be running into with their banks or anything like that. So we're actually just purchasing those outstanding accounts receivables, and then we take a small discount on them. So call it 2%. Would be what they would just be discounting those for us to take them on and speed up their cash flow. Another great thing is it's relatively fast compared to other options. So, I know sometimes SBA gets a bad rap about taking forever. Traditional bank financing sometimes can take three months, 6 months to get those in place. And factoring, lots of variables in there, but can typically be set up in place in 2 or 3 weeks, usually less than a month. And depending on the situation, sometimes that can go as fast as a week to get cash flow moving for them. So terms are relatively short compared to other, bank type products. SBA, typically a 10-year product. This is going to be just on a recycling 12-month contract. So if someone just needs factoring for a short amount of time or accounts receivable financing for a short amount of time, it's a great option for them too. Maybe their business is in a substantial growth period. They just need to speed up the cash flow, and then in a year or two, it's going to be back to normal. So great option for growing businesses. Also, too, eligibility is really, really simple, because we look at the credit of Walmart or whoever their customer would be in that situation. So if the manufacturing company in that situation has maybe fallen on some hard times, or they're just new and they don't have established credit, it's a great product for them, because we really value the credit of Walmart more than we do the manufacturing company in that situation. So, and we know Walmart obviously has great credit. So additionally, there's relaxed credit standards, since we're actually buying an asset that'll liquidate in sometime around 60 or 120 days. It doesn't make it to where we need a really solid history of borrowing requirements from that manufacturing company. So it's great for maybe companies that have fallen on hard times or just don't have a super solid credit background to stand on. So. And then a great thing too is for any of our partners that are out there referring us deals, it's residual income. So as long as they're a customer of ours, you're going to get a monthly payment on that. So customers, as you stack that up, it's not unheard of to really make some strong residual income just by referring customers over that need the service. So any questions on that? No? All right. So industries we serve, or what industries are a good fit for us. So oil and gas is one that, we're really excited to do. Not everyone does oil and gas, because there can be a lot of restrictions and stuff. A lot of banks don't like oil and gas, but we do. Again, we're looking at companies, their debtors credit. So, Conoco or BP or whoever they might be doing the work for, they have great credit, and that's kind of how we decide on that. Manufacturing, like we talked about, is a fantastic one. Manufacturing has pretty slow payment terms. And so a big need out there for manufacturing companies who might need to speed up cash flow. And one thing, when someone starts a company, they really don't think about working capital. They don't realize that, yes, we have to make payroll every 2 weeks and our customers might not pay us, but every 2 months. So it really, really can create some headache if you don't have the right cash flow going in there. Um, Construction, one that is traditionally a really tough industry to fund. We're very, very good at construction. Our back office support team has customers in the construction industry that have been with them for 40 plus years. We've got a really, really solid group of people in the back office that are running. So one thing about construction is it's really, really intensive on the back office side because there's so many waivers and liens that go into completing a project. So if you're a small construction company, having a back office that knows how to get those waivers and handle those liens and stuff on every single project is huge. A lot of them, maybe even if they don't have a strong need for certain types of working capital, just to have the service and the support team in the back office that can help with collections and those types of things is really beneficial to them. And so warehousing and distribution, same thing, a lot of slow playing customers, staffing agencies, you think of someone who's running probably weekly payroll. But if they're staffing, a government agency or something like that, they might not get paid, but every 120 days as well. And then transportation makes up a really big sector of the industry. Transportation, it can be a challenging animal, but it's something I worked for Love's Travel Stops for 8 years, so really strong background in transportation. And even if it's not something we fund, if you guys ever have questions or just need to talk through a transportation deal, I'd be more than happy to be a resource on that. I've sat in thousands of meetings with fleet owners talking about the needs of transportation companies. So, and then other small businesses, basically, if you have a business to business product or business to business receivables, fantastic fit for accounts receivable financing. So any questions on industries? All right, very good, Jim. I appreciate the feedback I see there. So what other finance products does accounts receivable financing work well with? So SBA is one of the top ones. It works very, very well with SBA loans because, and you guys do a ton of them, the SBA only gives about a 10% collateral value to outstanding accounts receivables. So because of this low amount, it's a lot of times, especially if we know the SBA lender, if we're able to reach out to them directly and talk with them, it's really easy to work together on the appropriate paperwork and subordination. It's just they don't see a ton of value in it, and we do see a ton of value. So it's really great hand-in-hand finance relationship. Real estate, equipment, those are fantastic as well. Typically, when you're looking at the capital stack, the equipment lender, the real estate lender just has their specific collateral tied up in the deal. So the accounts receivable being our collateral, it makes it really easy to work with equipment lenders and real estate lenders on those types of needs. Term lenders, typically like a traditional business term loan, works really well as also. That can be kind of case by case, but we've had a lot of success. Some lines of credit, it depends a lot of times on like the bank or the lender that has the line of credit. So we have some great bank relationships where the bank will call us and ask us to do the working capital because they, one bank that was working on a deal with a cookie maker for Walmart and Target, that type of deal. They wanted to do all the stainless steel, the kitchen equipment, the real estate, everything, but they just didn't want to have any part of doing with the working capital side. So it was a great fit for us to come in because we didn't want to do any of the other types of lending. So, and then lenders that don't like, traditional working capital. So some smaller banks, especially, they like to have hard collateral, which is perfectly fine. We wouldn't consider ours hard collateral, so not a tangible collateral anyway. And so those types of banks, those types of lenders, if someone already has a relationship there, it's a great, great fit for account receivables. Because again, it's not a debt product. So you're not taking on additional debt that can skew things with the bank. So any questions on that? Capital stack or anything? Very good.
Okay, I think there's two questions on the checkbox. Michael is asking, so what if the customer wants a one-time sell of debt?
So if they just want to sell maybe a one-time type factoring situation, I think that we don't specifically do that, but certainly could point you in. There's a few companies, really kind of a niche deal there, that will buy kind of one-off situations like that. So certainly some options out there. I could point you in the right direction if that was needed.
Okay. And Elvis is asking, how about waste management and green energy companies? Do you fund those?
Yeah, yeah. Anyone in the energy sector, solar can be a little hard sometimes, but we have a really good construction crew that can help with that. But yeah, green energy, any of the energy, management is also a very good one as well for us. And so typically, we see waste management having a lot of government type contracts or municipality type contracts, and those, of course, are very good at paying their bills. So great questions, very good questions. And then some other services we offer, we do bookkeeping and accounting. We have tax. We're working on our tax license right now, so we'll next tax season be up and running with that. But doing some of the consulting and stuff right now. Project-based cleanup. Really, we started this side of the company because in accounts receivable financing, a lot of times it's someone has already leveraged as far as they can with the bank, and they just need some additional working capital to help make the business go, or they're just not able to tell their story really well to the bank in order to get that additional funding. So we can come in and establish them. We use QuickBooks Online. We have a QuickBooks Online account. We'll go in and create the account if they need to, add their transactions, create their financials, that type of thing. Or if they have QuickBooks or something like that, and they just haven't been keeping up with it, or really they just never decided to go out there and find an accountant or find someone that can help, we can get those cleaned up and looking really nice. So hopefully they can go out there and find the capital they need, whether that's working capital or SBA loan or whatever it might be. Of course, someone is any type of lender, especially over a certain size, is going to want to see financials and learn the financial history of the company. So tax strategy, we offer this mainly to small businesses. I'll tell you, we're not inventing any types of new tax strategy worlds out there. So we're not going to take them into, holding companies or anything like that. We're just basically going to keep them out of trouble with the IRS. So, and then quarterly taxes, helping people do SUTA, FUTA, those types can really get you in trouble with the IRS if you're not staying on top of those. Some of the specific ones, like, in transportation, there's IFTA, tax, and those types of things we can help with as well. Just keeping mainly anything the IRS off the back of these hardworking companies. So that's kind of how we came about and started offering that as well. So, and then if anyone ever wanted to, go out there and you guys, Alan, might offer this as well. Go apply for an SBA loan, maybe start a purchase, and they need projections or they need some industry information or a business plan or something. We can also help with some of that too. It's not something we do on a regular basis, but we're comfortable putting that together to help people qualify for those types of things. So, any questions on accounting, tax, all that fun stuff?
Caleb, let me ask you another question back to the account receivable. I'm sure
Yeah.
that people would like to know. Um, First of all, what type of documentations do you require from our client? And second of all, is that how do you evaluate this client, or how do you evaluate the deal? My understanding is that sometimes you also need to evaluate the vendor who is paying the invoice as well, right? So can you tell us a little bit about what's behind the scene?
Yeah, that's a great question. The biggest part of the credit decision is going to be the vendor. So typically, we'll try and get a customer list and just make sure it's something we're comfortable with doing from the very beginning. But as we're going into like a term sheet and stuff, we ask for pretty basic stuff that I think most companies are asking for, as far as, just some identification, an application that we have, just those types of things, maybe W-9. Financials, if they have them, that's fantastic. But a customer list, just some pretty basic information, and I can send those over to you, Alan, if you want to distribute that out. But it's really just 4 docs, just showing that they are who they say they are, an application, that they have insurance on the business, just real, pretty easy stuff to get started.
And if they have never done factoring before, this is the first time that they do factoring, would you consider that?
Yeah, of course. Of course. That's a great thing too about factoring or accounts receivable financing, because so much of the decision is based on their customers. Even if they're a brand new business or they've never done it before, they can be a really great fit for it, because we are looking at the quality of their customers. So,
And Mark is asking, how is your company different than other companies?
Great question. Very good. No, I'll tell you the area that we're going to really shine in is going to be kind of those first three off the top of the slide. Oil and gas, construction. We're probably one of the best in the construction. It is just very difficult, and we have such an amazing back office that can do it. And then the manufacturing, just those, we understand those really well. Transportation, we understand really well also, but there's some big players that have really just drove the price down to where it makes the deals a lot less appealing. So if you have a lot of them out there, we'd be happy to do them. But transportation is a very interesting industry right now. But from that, the service, we're going to be priced very competitively, especially in construction. We might be one of the lowest priced construction ones out there. But then they're going to really, I think, appreciate the service. Like we said, the collections, the back office side, because we understand it so well. And there are companies out there who say they do construction. They don't even really. Everyone, when you hear construction, everybody thinks of progress billing and milestone billing, and they think kind of that's the scary stuff. But really, it's all the waivers and the liens on the back end. You can understand how progress billing and milestone billing works. But there's just very few options out there when it comes to construction. When you do manufacturing well, there's very few players out there. When you look at something like transportation, there's probably 500 companies that are out there all trying to bid for transportation. So we really set us apart, and I would say those three specific markets. And like I said, construction, the lady who runs our back office, she's amazing. And she's had clients move with her from multiple factoring companies just because she's been doing it for so long. She's had customers literally for 40 years. And she's going to retire one day soon, unfortunately, and we'll miss her. But she's even had, what's incredible is customers that want a specific clause in the contract that say if she ever moves to a different company, they get to move with her. So our back office reputation, I think, is probably what sets us greatly apart, and specifically in those three industries than anybody else. I like that
Okay.
question. Very good.
Well, let me share with my 2 cents for this question, Mark. That as a broker, as what we do, I think the communication is very important. That makes what Caleb different than many other company that we work with. And probably you already know on our platform, we have over 500 different lending sources that we use. And honestly, for account receivable, we have handful of people or handful of lenders that can do account receivable. But what stands out is that for us, when the client call us, they demand an answer. Obviously, we do not have that answer. So most of the time when client call us, we will call the lender. And quite frankly, a lot of those lenders work from 9 to 5, and after 5 o'clock, you cannot get a hold of them. But with Caleb, pretty much I can call him up any time of the day, Saturday, Sunday. You know, if I don't call her in the crazy hours, he will normally pick up the phone and we can talk all kind of scenario. And to me, that is very important. Now, yes, absolutely, construction is what he does best, which is true. Also, some other areas, but to us, communication and transparency and able to get a hold of somebody or live body, that is what more important to us and our client. So that is what I would like to share with you, Mark, for that 2 cents. And it's not just happened to Caleb, to many advisors or many lenders that you see on our platform who did the presentation. They are pretty much in the same situation, and that's why we keep sending them deals and after deals and after deals and after deals. So even though sometimes some other lender come to us saying that, oh, I got a better pricing, I got a better program, I got a better bid, I got a better of this, I got a better of that. But one thing I ask them is that, hey, if I call you about 10 o'clock at night, are you going to pick up the phone? And if you can't, then I mean, sometimes honestly, our client calls about 10 o'clock at night, 11 o'clock at night, and they will just demand answers. So that's just my 2 cents right there.
No, I think that's great. And Alan, to touch on a couple of those points, communication is obviously very important to us. But we from the bookkeeping side, we're priced, in my opinion, ridiculously cheap compared to everything else that's out there. And we don't charge by the hour. We just do a low monthly fee. And we want our customers to call us and ask us as much questions as possible because it's valuable information. And frankly, I think a lot of the way a lot of accounting firms and stuff are set up is they disincentivize the communication because they charge hourly, you know, so anytime you call or email, you're going to get bills for that. And I just don't think that works well, especially for small businesses. You know, a lot of the customers we're working with are doing what we'd say less than 5 million each month in revenue. And a lot of them are closer to, you know, 250,000, 500,000, those types of customers. It really means a lot when you communicate well with them, you answer their questions. And I had a customer call me today that asked me just random QuickBook questions. They didn't want me to do any work. They just kind of wanted me to show them where to go to pull certain reports in QuickBooks. And usually their previous account would have charged them, you know, to take that phone call and spend, we probably talked for 45 minutes or an hour on the phone. So they're just very grateful for that type of stuff. And we're really, really focused on trying to help small business. And I tell our team all the time that our goal is to deliver so much value to our customers that they say, man, I pay 2% or 3%, or I pay $300 a month for accounting services, but I'd pay double. Like I get so much value out of this that, you know, I'd pay double. So that's the goal. So I appreciate that question. It's very good. And thank you for the kind words there, Alan.
Michael asked another question. Michael's asking, do you do solar plan formation for churches or solar farm startup? Churches have large roofs or land for panels. Do you do any of those?
Typically not, you know, we are a church typically just doesn't have accounts receivables, you know, which is what we use primarily for the collateral there. But if there was some way, I mean, I'd certainly look at something like that if maybe it'd be a unique situation. So we try and be pretty creative and take an honest look and hard try at everything that's out there. So.
Yep. And also, Jim is asking another question. With the construction deals, does your office prepare the lines and waivers for your clients so it freed up the administrative duty on their end?
Yes, absolutely. So it's really, there's a lot of synergy there because it's important for us to have those waivers in place. It's important for the client to have those in place. So we do that. We can also help with some of the material sourcing. We can, you know, we have some really cool programs around that. The waivers that are out there, the progress pay, some of their pay apps and those things. It takes a ton of back office support to run a construction company well. And it benefits everyone when that is run well, especially us as your finance partner. So we take all that on in the back office. Absolutely.
Okay. Thank you, Caleb.
Yeah, very good. I like the questions. So, some other things we'll work on. We like a lot of lending industries, and yeah, I don't know if you guys would share this or not, but factoring is certainly one of them, or account receivable. Just haven't quite adapted the technology. So we put a team of developers together. They've spent almost 2,300 hours working on this project for us, and soon will be what I have been calling the fastest factoring company on earth. So you know, that deal we talked about was an easy account receivable deal and it took 2 or 3 days to get done. Maybe it takes a week to get done. We've got a way where we're using AI to get that done. And we think about 30 minutes. So someone could come to our website, click on the link, apply right away, and we could have money in their bank account in 30 minutes. So we're slowly taking this to different industries, and then we're slowly going to grow it from small companies to large companies. But our plan is to launch this in June, the original MVP, and we'll have some betas and reiteration. But you know, call it a year from June, I think we'll be have a very, very impressive AI product out there that can do so much of the underwriting, the lien searches, those types of things, and the stuff that slows up deals in the lending space. It can really, really speed them up, so no one's having to wait 2 or 3 months to get working capital. They could have it in 30 minutes. So.
Great. Caleb, there's another question from Mark on the chat box. He's asking how long the company has to be in business and what is the credit score need to be?
Yeah, no minimum on either one of those. Company could be brand new. You know, credit score is kind of case by case basis. You know, if someone's really low in the 400s, you know, we'll kind of look and see why that's the case. One that I can think of is somebody went through a real bad divorce and you know, their personal FICO had taken a bad hit. So we try and consider all that. The great thing is we really look heavily at the debtor or at, you know, Walmart in the situations we've talked about. So personal credit a lot of times doesn't come into play too much just because, you know, we're making sure we get paid by Walmart as opposed to the customer paying us. Good questions.
Okay.
Very good. Well, and that's all I've got. So I appreciate the time this evening to try not to take too much of it. And I'm honored to be on the call. So thank you guys very much. And Alan, I'll keep you posted too. Maybe once we get the product up and launched as a well-oiled machine, what we plan to have is affiliate links. So everyone can just click the link or send out the link directly to a customer that would then track it back to you guys, and they can move at the speed of light as well. So we wouldn't need to send in a packet through documents and stuff. They could just click the link and get started. So once we're live and stuff with that, I'll make sure and keep you posted. And I'm sure we'll talk 100 times before then now.
Okay, great. We do have a few more questions right here. Zarita is asking, what is your max on each invoice?
So we don't particularly have a invoice max. We do look at things like customer concentration, those types of things. And typically, if it's the right deal, we would do over $5 million a month. But most of the time, we say, just kind of as a rule of thumb, we like to kind of stay under that $5 million a month um, for any one individual company. So someone who's doing, call it 60 million a year in revenue, that's an area where we do really well in. But for the right one, we could go over that. But and no single invoice maximum or anything like that. So.
So are you saying that you can fund as much as the invoice comes in?
Yes, that's what I'm saying. That's what I'm saying. Yep.
Okay, that's a beautiful thing. My understanding is that I run into a situation where in the past where a client um, he has a few debtors, not just invoicing Walmart, but he also invoicing other debtors as well. But some of them are not factorable. Can you explain to us what that means and why some debtors not factorable?
Yeah, and there are ways too that a not factorable debtor can be worked around. But essentially, you see an MSA sometimes with larger companies, sometimes in oil and gas, you run across this where there would be a specific clause saying that you're not able to leverage this contract in any way for your financial benefit. So they include factoring in that. And a lot of times, what will happen is a factoring company will want to reach out to the debtor and just say, hey, we have an invoice here for $10,000. Is this correct? And just get a verification that way. In that situation, it's not really a possibility. So there are options out there to do what we call confidential factoring. So we'll just have the customer update their remit to information to a lockbox at our bank. And so it'll have the customer's name on there. It'll just have new account information. Everything will look the same. They just won't have control. We'll have a DACA in place so we can have control over the account. So the customer in that case would still be paying the company directly. That company just doesn't have the ability to withdraw those funds. And then once those funds come in, we just move them to an operating account that the customer has set up. So
Okay, great. Um, Before we let you go, can you share with us? I understand, obviously you share with us the industry that you can do business with, right? Can you share with us some example of clients? So let me start out off, right? So for example, we done a factoring in the past where an IT company that provides IT support to a particular company and they got invoiced every single month. So that is one client that we can factoring. Of course, you mentioned that a manufacturing company that provide products to Walmart that they got invoiced every single month. Now we can factoring. Can you give us some more example that you're seeing out there to open up our minds so that when we go out there to look for clients and we have other opportunity, look into other opportunities?
yeah, absolutely. So I'll just kind of take you through a couple that we've worked on recently. One, a manufacturing company, but they specialized in specific types of pipelines. So most of their customers, and they had, call it 50 or 60 regular customers, were in the oil and gas industry. But some of them were government contracts. So they were making parts for Navy submarines and those types of things. So the oil and gas companies were typically paying slower. The government, of course, pays very slow. So great situation for factoring so they can go in there and speed it up. Some of their customers had specific clauses about confidentiality, that we had to come into the DACA control account, those types of things. So, and also when you run into customers of a certain size, typically over 5 million, I would say, They like to keep their finances pretty confidential anyway. So, products like a DACA account through the bank and doing less verifications or verifications where you're calling as a representative of the company can be really beneficial. Another one just recently is a construction company. They do a lot of cooling type pipes. They install them. They're working on the chip plant out in kind of the Phoenix area. They do some stuff in Texas. So they do progress billing, which, of course, is very complicated, but was a really great one just because in their industry right now, they're seeing a huge uptick. The chip manufacturing plant is I don't know if you guys are familiar with that out there, but they have lots of, 50, $100 million contracts out there for some of the workers. So another one was a sand and gravel hauler. So they would go and helping build neighborhoods and stuff like that. And their debtor in this situation was just a general contractor. So they just billed by the hour where they would go in, pick up a load of gravel, go drop it off, and then have a timesheet and write that down. So not a traditional transportation one, more of a service type transportation. And then any trucking companies you run across, typically they're going to have a very standard way that they do invoicing and billing. It's going to be a rate confirmation, an invoice, and then a proof of delivery. And those are very, very cookie cutter and easy to get done because there's not a lot of variance in how they do those. And those are just some recent ones that have come to mind. So, but just about any industry that has B2B receivables is a great fit for factoring. So, or accounts receivable financing.
Okay. So Jim is asking another great question right here, saying that in construction, a subcontractor will submit a billing that projects to the end of the month that will affect amount. If there is a delay of job that affects approved billings, how do you deal with that?
Yeah, that's a fantastic question. And I know you're knowledgeable about construction when you ask a question like that, because that's very specific. So typically the advance rates on construction are going to be lower. So typically in construction, you'll see that the pay app is due a lot of times on the 25th of the month. So they're kind of projecting out that last 5 days. And so when we advance at 80%, usually it takes care of any discrepancy that might be there. As far as rain coming in and delaying work and those types of things. So a little bit lower advance there is kind of how we get around that situation. But yeah, you're exactly right. And those are the ones we love, self-performing construction companies. So not the general contractors, but the tier 1 or tier 2 subs are fantastic. The concrete company, the drywall company, those types of things. We really like those. And you're right, that typical with AIA pay apps that they project the last 5 days. So.
Great.
Very,
Looks like a lot of good questions. And let me ask another one then.
yeah.
Now we talk about factoring a lot. We also have clients that come to us that they haven't started the work yet. They got the order from the government, they got the order from a company whatsoever, and they need working capital to start the work. Um, I believe it's called purchasing order, the PO order. Now, I know that you might not fund something like this, but can you share with what you know if a client come to us looking for funding like this?
Yeah, so we don't specifically carry the PO, but the great thing is all PO lenders want to exit. So before they're going to fund that PO, they want a factoring company or someone to take them out once the good has been received or they're at a spot to exit. So we work really great with PO lenders from a takeout perspective because we can come in there and once the billing's been completed, we can come in and help them out. So um, oh, there's another part of that question that I was going to answer. Oh, from a construction standpoint, again, talk about construction specifically. A lot of times in the pay app process, that first one is going to be mobilization, right? So just showing up to the job site, putting your tools there and stuff. And so sometimes they can get a portion of that in the first pay app. We don't pay on mobilization, but what we do is we have our material sourcing. So we can do that several different ways. If the customer gets a discount for paying early, we can pay that material off before they've even factored those. So if say they get a 5% discount for paying in 10 days as opposed to carrying it out for 30 or 45 days, they've covered their factoring fee in that situation. We can pay upon factoring. So what we do, as well as we support the AP side. So all of the AP that comes in from the project, we'll pay that out before paying the factoring fund. So we can just pay when they factor. Or if it's something where they do just want to run it out for 30 or 45 days because that's their terms with their vendor, we can hold on to those funds and then we make that AP payment when they tell us to initiate it. So it's really great source, because a lot of times in construction, customers come to us and say, I want to get started. I just don't have the funds to go out there and buy the materials. Well, we have a material program that really has 3 great options for them, just depending on what their situation is.
So are you telling us that you work very closely with some PO lenders where if we have a client that comes into us saying, "Hey, Alan, I got an order, I got a project, I just win the contract from the government whatsoever, and I need some capital to start out the work, and you can help us out on that with that particular client."
Yeah, so we can either reach out to the PO partners directly and set you guys up with the referral fee on that for sure. Or if you guys have a PO lender in mind that you prefer working with, we can be the takeout for them. So a lot of times, if you have a PO partner and they want a factoring partner to take them out, if you don't know that factoring partner, then you have to go and kind of get the referral agreements in place, and just adds another layer. With us, we've already got the relationship there, so you can just bring us in and we can work directly with that PO lender to come in and provide that exit for them.
That is fantastic. Now, guys, listen to this. Many of our clients actually come to us. They work for the government. They bid contract through the government. They got awarded by government contracts or any type of contracts, but they need working capital to start the work. So many times, traditional lender would not fund them any working capital based on the contract. But what Caleb is saying, that we have resources right now that can help those clients. So again, that opens up the door for a lot of other businesses. So go out there and let them know that we have the ability to fund them. Okay. Uh, every
Absolutely.
yeah. Go ahead, Caleb.
No, I was just absolutely, yeah. We have the ability to get it done. Absolutely.
Yep. And Elvis, I see your hand is raised. Elvis.
Okay, I was trying to absorb what you just said there, and if it is what I think it is, and that may relate to a deal that you and me, Alan, we talked about in the past. Caleb, I don't know if you remember the deal, Alan. I had I brought up waste management in the chat because there was this they had a giant patent where they were melting plastics into oil that has never been done before. They have the proven method. They have the oil samples, blah blah blah. And there was like gigantic companies in like India and other parts of the world that were willing to give them millions of dollars of business lines of credit to take on, their company, outsourcer or whatever I don't know the entirely the lingo, but they needed to see, like the operation side of this company. They came to me and Alan to say, hey, can you help, fund us? And what they were actually looking for was an investor. It wasn't a traditional style of lending. This was George's deal, Alan. I don't know if you remember this. And yeah, he just could never really find the money to get going, to get that, it was like a loan within a loan. He needed that money to get, the other funding, and he just never got that, gap that needed to be filled. Is that kind of what we're talking about here?
Yeah, from the PO side, and I'll tell you, sometimes if it's internationally based, which not sure if this one would be or not, it can be
They're a
a little.
U.S. company, though. They just had interest outside of a foreign interest. But go ahead.
Oh, okay, gotcha. But if the payments are, domestic, then that
Okay.
helps alleviate that. So, but yes, correct. There's options out there to where we can get that, the PO funding or the upfront sourcing in order to get the project started, and then we come in as that factoring company to help them with the ongoing working capital once they're up and moving and on a regular billing cycle.
Okay,
So
is that
probably
something? Yeah, go ahead, Alan.
no.
Let me know
That's
what we
one
should
thing
do.
that was probably is worth for you to set up a conversation with Caleb and myself, and we can talk this thing in detail. It might
Yeah,
it
let's.
might be a possibility right here.
Okay, yeah, this was like a year back already, and I couldn't really do much to help him. Kept trying to find pull investors to his side, and it's getting closer and closer, but we haven't hit the mark. So Alan, yeah, I'll set a Calendly with you, and I'll add Caleb as the topic with George's company. And yeah, let's see if this time we get a different result. Thanks a lot.
Very good, very good. Hey, that's the value of meetings like this. So you come to a meeting like this, hey, you might get a deal done.
Absolutely.
Okay. Eric is asking another question that I don't think has anything to do with account receivable. He's asking, I want to, I want a funding to purchase a multifamily building. How does that work? So, multifamily is totally different than account receivable, which is our main topic tonight. But I just touched on, let me touch on multifamily. First of all, let's define multifamily. Multifamily is 5 unit and above. Okay, 5 unit and above. So multifamily, there are many different ways to fund this project. The first thing that we looked at is occupancy rate. Okay, occupancy, and also we need to look at the rent roll, and we need to look at the operating statement. What does it mean? It means that let's say you have an apartment building for 10 units. Okay, and the 10 unit, and if 90% of them are occupied, this is fantastic because all the lenders looking for high occupancy buildings. Anything that above 75% you consider to be good. So let's say you have a building that is 90% occupied, and every single unit is getting market rent. Why do I have to emphasize staying there for a long time? And today's the market rent would be $2,000, but they are still paying for $600, for example, right? So again, so they're looking at the rent roll, they're looking at market rent, they're looking at the operating statement. Operating statement means that, hey, who is paying for the taxes? What's the operation cost? What are the insurance, management fees, so on and so forth. So those are the things that they looked at, and ultimately, what we want to calculate is something called DSCR. Okay. Now, if the DSCR is 1.25 and above, we have a lot of options for this particular building. We can go to a traditional commercial build a loan. We can go to agency loan. We can go to Fannie Mae, Freddie Mac loan. We have many different options. So give you an example. Right now, we just quoted a $31 million apartment building in Texas, $31 million. And the interest rate, it's less than 6%. Okay, I believe it's at 5.875, something like this. It's because that building is a beautiful building. Now, however, if that building is not, it does not have the occupancy. For example, let's say the building only occupied by 50%, or if the rent is not a market rent, or if the building is not DSCR, or debt is cannot be debt service. That's what we call. Now you cannot get to agency loan, or you cannot get to a commercial loan or a long-term loan. Okay, nobody's going to give you a long-term loan. So most likely you can get something called bridge loan. A bridge loan, they will still give you some money. However, once you have that money, then you need to stabilize that building. Stabilize means that either you raise the rent or you stabilize it, meaning put more tenant into it, so on and so forth, to get you to the building that can qualify for an agency loan. So in short, for multifamily, yes, multifamily is one of the best asset out there right now, and a lot of lenders are willing to fund this type of project. But again, it really depending on the project itself, and of course also depending on the experience of the principal. Now if you have somebody going out there saying that, okay, fine, I'm purchasing a $31 million multifamily, but I don't even own my own home. So again, most likely they're not going to give you that loan because you don't have the experience. But however, if you already have multi-family experience, that is something that they will also look at also, right? So the best thing for you to do, if you're one of our consultants, you will have your own website. Submit what we call a scenario form. If you don't know what a scenario form looks like, let me share that with you. Okay. So this is our website. um, each one of you, when you got into sign up with Sequoia, this is your website right here. So you go to solution, you will see real estate loans, real estate funding, business funding, so on and so forth. So for example, if you go to business funding, and you will see account receivable. That's what we talked about right here, right? If you go to real estate loans, and you will see multifamily. So all you have to do just to click on it and submit a multifamily scenario to us. And once we received it, then we can give you a better idea based on the information that you input. How are we going to structure that deal? So again, that is what all the advisors do on a day-to-day basis to structure deals for you guys. Uh, Leon is asking another question. What LTV did you offer them on the multifamily? Okay, $36 million. That one, it's stabilized multifamily. So that particular one, we are able to get up to 80%. We are able to get up to 80%. Okay. I have about 5 buildings already with multi-unit. Perfect. Fantastic. We can definitely get it done for you. Okay, well, again, I think those are all the questions that we have for tonight. A lot of great questions for account receivable, and thank you so much again, Caleb, for sharing with us the insight about what factoring is all about. And hopefully, ladies and gentlemen, that we can see the value of the Sequoia platform. And there are many clients out there that needs our help, needs your help in your community, whether it's account receivable or whether it's multi-family or any other product and services that we have on our platform. And I encourage every one of us to get familiarized with, what we can do on our platform. And the most important thing is that now you have the knowledge, you understand what we can do. Go out there, utilize it, and make some good money for yourself. So any other question? How do I register? Eric, it looks like you are the first time here. Who invited you here? Please contact the person who invited you here tonight. And if you don't know who that person is, give me a call. I sign you up. But we do have a hierarchy structure right here where who invited you here, then they will, then you sign up under the. How does the profit sharing work? Okay, very good question. Yes, we are just like any other brokers. Okay, you do get paid based on commissions. If you refer us a deal, regardless what type of deals. If you don't want to do anything, just give us a referral. We assign somebody to close that deal for you. We pay you 23% of what we make. Give you an example. Let's say we are doing a factoring deal, $1 million, and Caleb pays me 1 point and 1 point only. Okay. So that is 10,000 commissions that comes into Sequoia. Now, if you are the one that refer us the deal, you don't want to touch, you don't want to deal with anything, you will get 23% of that $10,000, which is $2,300. However, if you help us to collect documentations and follow up, for doing loans, the biggest hurdle, the time consuming thing is to follow up, get the right document from our client. So if you are able to help us out, we will double your commission from 23% to 46%. So same $10,000 that we get, now in this particular case, you will get $4,600 out of it. But on top of it, we also pay you what we call revenue share, meaning that Eric, somebody sign you up. That person, because without that person, the company cannot get to your business. So we appreciate that person. So that person is going to get a percentage out of it, so on and so forth. So I don't want to go into more detail. We're running out of time. But if you go to our website, let me share with you one more time. Okay, so if you go to our website, right here, you will see our YouTube channel, and you click on the YouTube channel. And this is our YouTube channel. All the training that we do every Wednesday night English, every Tuesday night Chinese, every Monday night Vietnamese, whatever the language would be, we will record it and put it onto our YouTube channel, and you can watch it anytime that you wanted to. And right here, we do have a video called Complan 6.0. As a matter of fact, we already upgraded to Complan 6.5. So go ahead and watch it, and I gave a detailed a presentation exactly how our compensation work. Okay, so again, that is our resources. And let's see, are there any other questions? What is the website for his company? And okay, the website for the corporate company is www.sexsolution.com. But please, Mark, talk to the person who invited you into the company, and that person has his own website. So for example, my website is alanwood.sexsolution.com. Bobby has his website, bobby.sexsolution.com. So I don't know what your the person who invited you here what his website is. So please talk to him. Okay. So again, that's all we have. Thank you so much, everyone. And I welcome again next Wednesday night. We will have another topic to share with you what's going on in the commercial lending side of it. One more time, thank you, Caleb. I'm sure that we can do a lot of business together.
Thank you for
So
having
until
me.
then, good night, everyone.